If you're an entrepreneur, someone like me, or you want to become one, there comes a point where the conversation has to get bigger. Not just, how do I make more money this month? Or how do I survive another quarter? But how do I actually build something that lasts? How do I stop renting and start owning? How do I buy into opportunity instead of waiting for opportunity to magically show up? How do I grow faster without feeling like every step forward has to be dragged uphill with my own cash? That's where a lot of business owners get stuck. Not because they lack ambition, not because they lack work ethic, not because they lack vision. They get stuck because nobody ever really explained the financing side of entrepreneurship in a practical and meaningful way. Most people hear SBA loan and think of some vague business loan they've heard about, but never really understood. Maybe they think it's only for buying a building. Maybe they think it's hard to qualify. Maybe they think it's not for them. But the truth is, SBA lending can be one of the most useful tools available to entrepreneurs when used the right way. It can help you buy real estate for your business. It can help you buy a small business instead of starting one from scratch. And it can help you fund growth when your business has momentum, but needs capital to go further. So today I want to break down those three lanes in a way that actually makes sense. I'm Dustin Owen, and this is the DO Show. They don't teach this shit in school, but they should. I'm Dustin Owen, and for the past 20 years, the mortgage industry has been my classroom. I've helped over 2,000 families become homeowners, built a $1 billion mortgage operation from scratch, and earned my way into the top 1% of income earners worldwide. Along the way, I became a real estate investor, a business owner, and have invested in over 20 tech startups, even hitting a 20x return on one of my investments. This isn't theory, it's experience. Welcome to the DO Show, where I teach the lessons life taught me the hard way. Let's go ahead and start with the one aspect of SBA lending that most people, including me, several years ago, are most familiar with, and that's buying real estate for your business. A lot of business owners spend years renting office space, warehouse space, retail space, or some kind of operating location. And after enough time, the question starts to hit them. Why am I paying for someone else's building every single month when I might be able to own it myself? That's where SBA financing can become really powerful. Because one of the major use cases for SBA lending is helping owner-occupied businesses buy commercial property. In plain English, it means the business is going to actually use the property, not just buy it as some kind of a random investment. And what makes this so attractive is the structure. Traditional commercial financing often wants a big down payment. And that can be a huge barrier for entrepreneurs who have built a good business, but just don't have a bunch of cash sitting around. SBA financing can create more flexibility. That matters because many business owners are strong where it counts. The business has revenue, the business has clients, the business has history, the business may even be paying a substantial amount of rent already. But because they've been reinvesting in operations, they may not have a whole lot of liquidity. So the opportunity to buy a building with a more accessible structure can be a game changer. And this is bigger than just replacing rent with a mortgage payment. It's about control. It's about stability. It's about building equity in something your business uses every single day. It's about not being at the mercy of rising rent or lease renewals or somebody else deciding what happens to the property when your company operates. For a lot of entrepreneurs, owning the building becomes one of the smartest long-term wealth moves they make, because now you just don't own the business, you own the location too. And over time, that can completely change the financial picture. Now, let's talk about the second way, and honestly, maybe the way that more people should be thinking about an SBA loan. And it's about buying a small business. There's this weird obsession in business culture with starting from the zero ground or the ground floor. Everybody wants to be the founder. Everybody wants to launch the thing. Everybody wants the branding, the website, the announcement, post, the whole performance. But starting from scratch is not the only path to entrepreneurship. Sometimes the better move is buying a business that already exists. That means buying something where, well, you already have customers and revenue and systems and employees and vendor relationships and an actual operating history. That is a very different game than trying to invent everything from scratch. And this is where SBA lending can open a huge door, because one of the strongest use cases for SBA financing is helping people acquire existing businesses. That could be a local service company, a retail business, a niche operation. Heck, it could be a family-owned company where the owner is ready to retire. A business where the current owner is burned out, but the business itself is still healthy. It could even be a company where you already work and ownership is looking for a way out. That's a real path. And for the right operator, it can be a much smarter path than starting cold. Because when you buy an existing business, you are not starting with hope alone. You're stepping into momentum. Now, of course, that does not mean every small business is worth buying. Please don't think that's what we're saying. You still need to look at the numbers. You still need to look at the cash flow. You still need to understand the customer base, the risk, the systems, whether the business can survive a change in ownership. But if those things make sense, acquisition can be one of the fastest ways to step into real ownership. And that's what makes this topic so important. A lot of people think entrepreneurship comes building from scratch. Sometimes entrepreneurship means buying something solid, making it better, and growing it from there. It's not less entrepreneurial, trust me. And it's often more strategic. Now let's go ahead and talk about the third way SBA loans can be leveraged. And it's for funding growth. Look, not every entrepreneur needs to buy a building right now. And not every entrepreneur is ready to buy a business. Some people already have a business and that business is working. The issue is not whether the business is real. The issue is whether it has enough capital to grow the right way. We all know it takes money to make money. And that's where a lot of owners hit a wall. They have demand. Yeah. They have traction. Yep. They have momentum. Check. But they are trying to fund every next move out of whatever cash is left over after everything else gets paid, including themselves. And that can slow a good business down quickly. Sometimes the business needs to hire people. Sometimes it needs better systems. Sometimes it needs equipment, marketing software, or operational improvements. Sometimes it just needs runway. An SBA loan, you know what it can do? An SBA loan can offer runway. And when owners try to bootstrap every piece of growth forever, they can end up strangling the business. Now, to be clear, this does not mean debt is always the answer. Bad use of money is still bad use of money. Borrowing without a plan is dangerous. Borrowing to cover chaos is not strategy. But when a business is healthy and the owner has a clear use for capital, funding growth can be the thing that helps a company move from stable to scalable. Think about that. From stable to scalable. There's a big opportunity there. There's a difference. Not using money just to survive. Using money to create leverage. Using money to accelerate something that is already working. And the mindset shift. Well, the mindset shift, this matters. Because too many business owners wear undercapitalization like it's a badge of honor. They call it discipline. Sometimes it is discipline, true. Other times it's fear. And knowing the difference is part of being a real operator. If the business has a sound model, real demand, and a clear path forward, capital may be the thing that unlocks the next level. So listen, whether you're looking to buy real estate for your business, you want to buy a small business instead of launching something from scratch, or you're wanting to fund growth inside of a company you already own, here's your big takeaway. There are more paths to ownership and expansion than most people realize. And the entrepreneurs who win long-term are usually the ones who learn how to use the right tools at the right time. If you got value from this episode, make sure you subscribe to our YouTube channel and follow us across all our social media channels so you stay plugged in for more conversations around business, entrepreneurship, sales, and honestly, just building something real. I'm Dustin Owen. Thank you for tuning into the DO Show. We look forward to seeing you on our next episode.